the most distinguished news reporter, the man of ongoing innovation, the man of ongoing inspiration, the man of non-stop news fabrication and manipulation, and the best combination of devilishness and nonsense. Our live reporter, my dear colleague Maamoun Ben Haroun, will talk about factoring of accounts receivable from the headquarters of a factoring company. The senior leader of the news desks, the major general of the news and talk show programs, the wearer of most fashionable neckties and sunglasses ever, the man who has never been held accountable and never questioned, and the biggest mouth ever, Mr. Robert Haroun. I think we have been badly infected and have totally converted into the style of presentation of Mohammed Nasser, the sports TV director, and Captain Medhat Shalabi or Shalabuka, the TV sports commentator. Back to the course of our report, I can inform you and our beloved viewers that factoring of accounts receivable is a transfer of receivables to a third party, a factor, who assumes the responsibility for collection. Factor charges interest for the period from the date of payment to the seller of receivables to the date when collection of receivable is due. Payments by debtors on the transferred assets are made to the factor. Are there more than one form transaction for factoring accounts receivable? Yes, there are two forms of transaction for factoring. 1. Factoring receivables without recourse, and 2. Factoring receivables with recourse. Could you please tell viewers what the factoring receivables without recourse is? If the transaction of factoring accounts receivable is without recourse, the transferee or the credit agency assumes the risks and receives the rewards of collection. In this case, the transaction is a final sale and the seller has no further liabilities to the transferee. Accordingly, the receivables are no longer reported in the seller's books. What are the conditions that have to be met to treat the transaction of factoring receivables as a sale? The transaction is treated as a sale only if three conditions are met. These are: 1. The assets have been isolated from transferor, in the meaning that assets are beyond the reach of the transferor or its creditors. 2. The transferor does not maintain effective control over the transferred assets through certain repurchase or redemption agreements or the ability unilaterally to cause the holder to return specific assets. 3. Neither a regular transferee nor a holder of beneficial interest in a qualifying special purpose entity, for example certain trusts, is subject to a condition that constrains its right to pledge or exchange those interests and provides more than a trivial benefit to the transferor. Could you please tell the viewers what factoring of receivables with recourse is? If the factoring transaction is with recourse, the transferor or the seller may be required to make payments to the transferee or to buy back receivables in certain circumstances. In this circumstance, the transfer might not qualify as sale. The parties account for the transaction as a secured borrowing with a pledge of non-cash collateral. Accordingly, the receivables are still on the seller's books, and it must recognize a liability for the amount of cash received. For our viewers to better understand how the amount of cash that a transferor receives and the related cost to the transferor are calculated on factoring of accounts receivable transaction, could you please give us an example? The example is: assume that a factor charges 2% fee plus an interest rate of 18% on all cash advance to the transferor of accounts receivable. Monthly sales is $100,000 and the factor advances 90% of the receivables submitted after deducting the 2% fee and the interest. Credit terms are net 60 days. Based upon this arrangement, what is the cash amount to be advanced by the factor to the transferor and the related cost to the transferor? I am the only person here to ask questions and get answers. Maamoun Ben Haroun. Don't forget who you are, and remember always that you are one of the reporters of the Major General. Okay, yeah, Major General, at first, we need to calculate the amount of cash to be advanced by the factor to the transferor. The calculations are made into two phases. Phase 1, calculation is to arrive at the amount accruing to the transferor, upon which interest from the date of payment to the transferor to the date collection of receivables is due, is to be calculated. The amount accruing is $88,000. It is the product of accounts receivable submitted of $100,000, minus $10,000 being 10% of the submitted receivables to be held as reserve, minus $2,000 being 2% of receivables submitted as the factor's fee. Phase 2, calculation is to arrive at the interest mentioned above, by multiplying $88,000 by the annual interest rate of 18% by 60 days divided by 360 days. This produces $2,640 of interest. Thus, amount of cash to be advanced to the transferor is only $85,360, being the $88,000 minus the interest charges of $2,640. Accordingly, the total cost to the transferor is $4,640, being factor's fee of $2,000 plus interest charges of $2,640. What will happen when the 60-day period has elapsed or when the collection of receivables is due? The transferor will receive the $10,000 reserve at the end of the 60 days period if it has not been absorbed by sales returns and allowances. Assuming that the factor has approved customers' credit in advance, the sale is without recourse, the transferor will not absorb any credit loss. Based upon the example, what is the journal entry that has to be made in the books of the transferor? The journal entry is to debit the cash account for $85,360, debit due from factor account of $10,000, debit loss on sale of receivables of $2,000, and debit prepaid interest of $2,640, against crediting accounts receivable for $100,000. After the 60 days, the $2,640 will be due as interest expense, and the $10,000 of the reserve be paid by the factor. Based upon the figures of the example given and calculations derived therefrom above, what are the journal entries that have to be made in the books of the transferor if the transaction of factoring accounts receivable is with recourse? 2 journal entries are to be made in the books of the transferor if the transaction is with recourse. The first journal entry is to be made when cash is advanced by the factor to the transferor. It is to debit cash account for $85,360, against crediting secured borrowing account for $85,360. The second journal entry that is being made upon factor's approval of customers' credit in advance and the transferor will not absorb credit loss. It is to debit cash account for $10,000, being the payment of amount previously reserved by factor, debit secured borrowing account for $85,360, debit loss on sale of receivables for $2,000 and debit interest expense account for $2,640, against crediting accounts receivable of $100,000. What are the main reasons for factoring transactions? The main reasons are, 1. The factor often operates more efficiently than its clients because of the specialized nature of its services. 2. The entity or seller that uses factor tries to speed up its collection. Also, it can eliminate its credit department and accounts receivable staff. In addition, credit loss are eliminated from the financial statements. These reductions in cost can offset fee charged by the factor. Thank you Maamoun Ben Aharoun, and to the silent actor and the 2 silent actresses behind you.